Welcome to Tech News Briefing. It's Tuesday, October 3rd. I'm Zoe Thomas for the Wall Street Journal. The collapse of FTX sent shockwaves through the crypto industry. The government alleges what happened at the crypto exchange was fraud, and it's charged FTX founder Sam Bankman-Fried with more than half a dozen criminal charges. His trial starts today, and we'll be covering it as the case unfolds. But to prepare us for that, our reporter Alexander Osipovich is here to talk us through what led to this point and what we can expect. So, Alexander, there's actually two companies here we need to talk about, FTX and Alameda Research. Remind us what their businesses were and how they're connected.
FTX and Alameda Research were two different companies that were both owned by Sam Bankman-Fried. FTX was a cryptocurrency exchange where various people could go and trade different kinds of coins with each other. Alameda Research was a proprietary trading firm that traded Sam's money and basically tried to make profitable bets on the crypto market of various sorts. Sam often spoke about how Alameda had no special privileges trading on FTX, but nonetheless, this was sort of a bit of a strange arrangement because in traditional markets, you wouldn't have an exchange and a profit-seeking trading firm both be so intertwined.
Before its collapse, FTX was sort of seen as this golden child in an industry that was struggling. But then at the end of last year, things fell apart. Can you take us through what led to FTX's collapse?
So the year 2022 was bad for crypto. There were a series of crashes, and it led to a number of crypto firms declaring bankruptcy. And as we subsequently learned, these crashes seriously weakened the finances of Alameda Research, Sam Bankman-Fried's trading firm. What happened in early November was that details were leaked about Alameda's balance sheet. And it turned out that Alameda's balance sheet relied very heavily on a token called FTT that you can basically think of as stock in FTX. And to many people, this seemed like a sort of precarious state of affairs because it suggested that these two companies were more intertwined than people had thought. And so worried people began to pull their capital out of FTX. And at this point, FTX didn't have the money to return funds to customers. Why is that? Well, it turned out that Alameda Research had been borrowing heavily from FTX, and the money simply wasn't there.
So what happened when it couldn't meet customer withdrawals?
After FTX was unable to meet customer withdrawals, Sam Bankman-Fried undertook a number of efforts to try to salvage FTX and basically quickly raise capital from investors. He briefly had a deal with a big crypto exchange called Binance that could have potentially propped up FTX, but the deal quickly fell apart. And within a few days, he signed over control of FTX, and FTX filed for Chapter 11 bankruptcy.
Not to put too fine a point on it, but that was a really big deal. I mean, Sam Bankman-Fried was a trusted, well-respected name in crypto, and then following FTX's bankruptcy filing, he was arrested in December and charged with fraud, which he's pled not guilty to. What can we expect from the trial?
Sam Bankman-Fried has not acted like a normal white-collar defendant. He gave a series of interviews and for a while was talking very publicly about his version of what happened. What he essentially has said is that there was no criminal intent to steal money. It was all just mismanagement and poor accounting and poor management of risk. The prosecutors contend that actually there was a scheme to use customer funds and direct them to things like buying luxury real estate and making venture capital investments and steering money to political donations.
Who do we expect to hear from during this trial?
One of the most interesting things about this trial is that 3 members of Sam Bankman-Fried's inner circle have pleaded guilty and are expected to testify against him. These are Caroline Ellison, who was the former CEO of Alameda Research and who at one point dated Sam, Gary Wang, who was a co-founder of FTX and responsible for a lot of its technology, and Nishad Singh, who was FTX's director of engineering. If these cooperating witnesses take the stand, it'll be very interesting to see what sort of things they reveal about Sam and how he ran FTX and what he knew about the misuse of customer funds and whether he basically masterminded it.
That was our reporter Alexander Osipovich. And that's it for Tech News Briefing. Today's show was produced by Anthony Bancy with supervising producer Melanie Roy. I'm Zoe Thomas for the Wall Street Journal. We'll be back tomorrow. Thanks for listening.